First over, but we aren't there just yet. So hopefully I can wake you up and give you that extra boost into the weekend. First and foremost, so happy you're here with us today. Uh, Look, the internet is endless, is one word for it, right? And you can be anywhere else right now. So I think it's totally cool that you're with me and you decided to spend just the next few minutes with me as we dive into alternative funding options for startups. Before we get ahead of ourselves here, which I tend to do sometimes, my name is Carl Peterson. I'm Credit Suite's content and social media lead. Of course, I'm joined by Alfredo in the virtual studio, handling all the behind the scenes stuff going on throughout. Alfredo's going to make sure he's keeping up with chat and dropping QR codes when they're relevant and putting links in chat for you to very easily click. He does all of this stuff while I ramble on and on and on and on and on and on and on to you all. So I'm happy he's here today with us as well. With that said, make sure to drop your business name and location and even give me a couple lines on what your business does. This is a live stream. So if you drop those things in chat, I'll give you a shout out. I'll say hello. It's one of my favorite things. I'm just going to say it is my favorite thing about doing these live streams. We have so many cool people from all over the country, all over the world sometimes tune in and watch these. So happy you're here. Drop your information in chat. I'll read it out on stream. It's my way of saying hello, and I'm glad you're here. So before moving on to today's main topic, the alternative financing options for startups, I have to do my due diligence, right? And make sure right away that you know about something huge, and it's our upcoming Credit Suite event this upcoming Monday. So in exactly 4 days, 4 days from right this second, we are going to be live for our virtual 3-day event, the Funding 50 Challenge. This is completely free to join, no strings attached. You literally sign up and watch it. That's it. Completely free for 3 days from industry experts, deep diving. And I took a look at the schedule a few days ago, and it is truly a deep dive into 50 plus ways you can secure funding for your business. And the best part is figuring out how to do that in 30 days. So we're not just giving you 50 plus ways, we're teaching you exactly how to make it a reality in the next 30 days, which is obviously massive. So I look forward to seeing everybody there. Alfredo, this is a super important one. So let's throw that QR code up on screen and let's just make sure that it's up the entire time. It needs to be. So link is in chat right now. You can scan that QR code if you're on a computer or anything like that, or just go to funding 50 challenge 50challenge.com and reserve your spot as we head into Monday for the Funding 50 Challenge. Again, this is Monday, the 22nd to Wednesday, the 24th. And you also get an additional bonus day as well that Thursday if you want to partake in that. You can't miss this one, and I look forward to seeing you there. So even though we're going to be going over 50 plus funding options on Monday for that challenge, right now we're going to be discussing 10 alternative types of funding that you can consider as a startup business owner. Let me catch up in chat really quick. GDTV from YouTube. Good to see you. Let's go Credit Suite Money Team. I love that. Good to see you, GDTV on YouTube. Also coming over from YouTube is James White. Greener Side REI LLC in Sacramento, California, buying and selling properties. Definitely need to scale my business for funding. Well, first off, James, you're in the right place at the right time. So happy that you're here. Second off, awesome business, even better location. That's super exciting. So before we get into the alternative ways of funding, what are the typical ways of funding? What are typical types of financing? So I'm not going to go super deep here because these are all things that I'm certain that we've all either used or at the very least heard of. Again, I just want to make sure though that we're drawing a very clear line in the sand between what's most common and what isn't. So that word alternative in a few moments holds just a little bit more weight, right? So The four most common types of business funding are: number one is a bank loan. This is as traditional as you can get, right? These are loans issued from a bank and typically requiring collateral and a fixed repayment schedule. Number two would be an SBA loan, right? So these are loans backed by the US Small Business Administration, or SBA, right? Usually offering very favorable terms and guaranteed for lenders as well. Number three, again, we're just flying through these to make sure that that line in the sand is drawn between traditional and that word alternative, right? So number three would be traditional investors. Think Shark Tank, right? That's the best comparison there. Think of a Shark Tank scenario. You present your business or product to an investor, they write you a check or they take a cut or whatever the case may be, and then it's done. We'll be detailing some specific types of investors in just a moment that do fall into that kind of alternative category. But number three would just be general investors. And then number four is Credit Suite's favorite topic of all time. Does anybody have any guesses? It's business credit. So this is when a business secures a line of credit to use, and that line of credit could be generalized or could be extremely specific on the exact thing that you need. An example of this would be a fleet credit line if you need multiple delivery vehicles, or a gas card even falls into that same example too. So these are like usually the big four that for that you will see nonstop and hear about when it comes to business funding. But there are options, which is one of the best parts about financing. There are always options, right? In fact, there is a huge list of traditional and unique, and even a kind of a mixture of both types of funding that can be used for a startup. So let's talk 10 of them. Let's talk 10 alternatives. Now, this list isn't going to have insanely odd or unique types of financing on it. In fact, I'm willing to almost bet that you've heard of all of these as well, right? To the point where you may even be scratching your head and going, Carl, I thought this was a traditional type of funding, and that's okay that you think that. I just want to highlight 10 different alternatives that, at the very least, could get those financial wheels turning as a startup business owner. So, starting off right away, number one is angel investors. Again, these are going to be things you've probably heard of, but let's dive into them. Angel investors. So these are individuals who provide capital in exchange for ownership or convertible debt, right? And an angel investor often has industry experience and can also offer a lot of guidance. That's a very attractive reason to go after an angel investor, because of not only the check signed, but on top of that, you also get all these little extra benefits like possibly decades of expertise. Next, you have venture capital. So this is, while a bit more traditional, venture capital involves funds provided by professional or institutional investors to startups with high growth potentials in exchange for usually a slice of the business. You see this a lot in tech industries, right? Crowdfunding. I know you've probably heard of Kickstarter, Indiegogo, among many others in the last few years that have popped up last decade or so. These allow startups to raise small amounts of money from a large number of people. So contributors may receive products or perks or equity in return. Next is peer-to-peer lending. So platforms connect borrowers directly with individual lenders, cutting out that traditional financial institution like a bank, right? Grants and competitions. This is something we actually just talked about this last Tuesday on stream here, but some startups secure funding through grants or by participating in pitch competitions. These can come from government agencies, nonprofits, even private organizations. Moving down this list, going through 10 alternative types of funding if you're just joining. Moving down this list is corporate sponsorships and partnerships. So partnering with established companies can provide not only funding, but can also access to resources, expertise, and customer base. Similar to that angel investor, you get a lot of extra perks too. And then revenue based financing, maybe you've heard of as well, which is investors provide capital in exchange for a percentage of the startup's monthly gross revenue until a predetermined return is achieved. Moving down the list, number 8 is bootstrapping. So, funding the startup using personal savings or revenue generated by the business. This approach allows founders to maintain full control, but also in the long run, it may limit growth potential as well. We'll talk a little bit more about that in just a minute. Number 9 is convertible notes. So this is a type of debt that converts into equity at a later date, often triggered by a funding round. This allows startups to secure funding without any kind of immediately determining the valuation. So that's always a plus as well. And again, we're about to go right into pros and cons of each of these. So stay tuned for that. And then last, number 10, not in any particular order, number 10 of our top 10, or I just said not particular order, and I said top 10. Uh, just a list of 10 alternative financing options for startups is a government program. So some governments offer programs and incentives to support startups, such as like tax credits or low interest loans, or even grants, like we touched on just a second ago. So you know the list of 10. Let's talk about these pros and cons, like I've been mentioning. So for an angel investor, a pro would be experienced guidance and mentorship from investors. That's the biggest part of it, right? That is the biggest perk. But you also get the potential for networking opportunities within their network, and then faster decision making compared to some other funding sources that have a lot of people involved. Cons usually is loss of equity and ownership control, right? And also dependency on the investor's expertise and availability is another one. And then also potential conflicts of interest with the investors as well. Unfortunately, that's just part of it sometimes. So that is definitely a con. Venture capital, the pros and cons. Pros are large funding amounts for high growth startups. Think of like AI. Think of my mind every time I think of venture capital. I think of companies like Meta. I think of companies like Oculus, which is Meta actually, but long time ago it wasn't, I guess. These companies that are very much, Open AI, for example, Chat GPT, that is absolutely what comes to mind. So large funding amounts, trying to get that massive return. Another pro is access to expertise, networks, and resources from venture capitalists. A lot of these people have their hands in many of Silicon Valley, many big, big, big industries that are not only on the come up, but are already a part of our daily lives and household names. So getting access kind of like to that direct line of other massive entrepreneurs and businesses is always a plus as well when you can get it. And then potential for rapid growth and market expansion, of course, as well, because of that money and those resources that they bring. Cons, though, of course, there's pros and cons to everything. So cons to venture capital is dilution of ownership and decision-making power, intensive due diligence and longer approval processes usually, and then pressure for those quick and high returns on investment. Crowdfunding pros and cons. Pros, you have access to a broad pool of investors, very, very broad. And then validation of product or idea through public support. And then also the potential for marketing and customer acquisition as well. Those are huge pros. The cons, though, are it is a little bit more time consuming as far as the campaign management, and even some marketing may have to go into those as well. Large fees are usually associated as well with crowdfunding platforms. Obviously, that depends on the platform. That depends on what you raise. That depends on a lot of stuff, but usually there are fees associated with them. And then, of course, the biggest con is risk of not reaching the funding goal. Yeah, that's the biggest potential con for crowdfunding. Next is peer-to-peer lending. Uh, Fearless PCAT. Thank you very much for that amazing info. Absolutely. Glad you're here, coming over from YouTube. Nice to see you. So good to see you. Peer-to-peer lending pros is a simplified application process, right? Very pretty much cut and dry. Uh, you have potentially lower interest rates when it comes to peer-to-peer lending, and then also diverse lending options based on your credit worthiness. The cons, though, can't say credit worthiness without saying some of the cons might be reliance on personal credit history. That comes with it when it comes to peer-to-peer lending. Also, a con is limited loan amounts for startups usually, and then also default risk and consequences, which is a whole nother live stream. Grants and competitions, the pros and cons. So the pros would be a non-dilutive funding with no equity loss, which is obviously huge. Recognition and visibility for the startup usually comes with that through the fund, through the grant or the competition, and then also support from the granting organization. So many grants have so many great perks attached to them, um, perks that you may not get elsewhere. Just Tuesday, I mentioned we did a stream on grants. The whole stream was about grants. That's on a video on demand right now. So if you want to go back and watch that, that's there, whatever platform you're on right now. But we mentioned the Amazon. I forget the actual. I think it's called the Amazon Black Accelerator program. And basically, it's an Amazon program specifically for Black sellers on their platform. And part of the perk is they give you advertising credits. That's massive. That's a grant they offer. And that's a huge deal, especially if you know how much advertising costs. So a lot of grants, not just that one, hundreds and even thousands of grants offer these little perks too. So that's always a big one. And then a con would be highly competitive application process. Highly, obviously, no getting a massive amount of money with no payback needed. You're going to have some competition, very specific eligibility criteria, and then also limited funding amounts compared to some other sources. Billy Quackenbush from YouTube says, "Good afternoon. I'm a veteran with 70% service connect disability, trying to purchase a business that has been a business since 2011. I started but never finished because the money problem and things. Sure, alternative blueprint lending, but never finished setup." Well, nice to see you, Billy. 70% Service Connect, trying to buy a business in 2011. Well, we just mentioned grants. Grants is a way to do that. Business lines of credit to do that. You have unlimited options with your very specific situation. Being a veteran right there, that's a huge one. You get access to funding options that civilians who have never served don't have access to. So right away, that's a massive perk. And you can absolutely use funding to turn around and buy a business. So many people lean into, I mean, when I say so many people, I'm talking about, we just talked about Meta. Meta famously bought Instagram 10 years ago. That was a competition. How do you think they bought that? They weren't using cash flow. So you can absolutely lean into so many different types of credit, business credit and funding options to buy out competition or just buy a business. Billy, give us a call. Alfredo, could you please drop the information in chat, the link, and then also the a phone number to call us directly. Billy, contact us. We can definitely see what we can do to get that process moving along, because it sounds like you got a good starting place. So we can actually see how far away or what you need to actually acquire that business. Nice to see you, Billy, from YouTube. And then next is moving down this list of pros and cons for the alternative financing options for startups. We just talked about grants and competitions. Now, corporate sponsorships. Thanks, Alfredo. Corporate sponsorships and partnerships. So the pros to that are access to resources, distribution channels and markets, potential for long-term collaboration, and then funding with strategic benefits beyond capital. Let's see here. Billy. Okay, thanks very much for the information and thank you. Absolutely, Billy. Yeah, like I said, it sounds like you have a good starting point. You got to figure out how to utilize that. So please contact us. Cons to corporate sponsorship and partnerships. The cons are usually pretty complex negotiations and agreements, and then dependency on the success and stability of the partner. Pros and cons of revenue-based financing. Pros, it aligns with the company's revenue performance. Also, pretty flexible repayment options based on the business income in like 95% of the cases, right? And then no immediate dilution of ownership, which is huge. If you can hold on to what you made, that's always a plus. Cons for revenue-based financing, higher overall costs compared to traditional loans, even some of the alternative options that we've talked about, limited to businesses with consistent revenue. So only a smaller percentage than the wide open gates of a startup, and then may impose restrictions on business decisions. Moving down the list here, bootstrapping pros and cons. Pros, full control of the business, no equity loss or external debt, and then focus on profitability from the start. Cons are limited initial capital for growth. You get what you get. So that adds a limit right away. Slower scaling compared to funding startups, and then also higher personal financial risk for founders. Convertible notes, pros for those are quick access to capital without immediate valuation needed. Potential for deferred equity discussions, which is big, and then also attractive to early stage startups. So that's a good one for a startup. And then cons are dilution of ownership in future funding rounds, uncertainty regarding conversion terms sometimes, and then also a lot of legal complexities and documentation. And then moving down that list to the last one, government programs. The pros there are access to funding and grants or tax initiatives, support for specific industries or technologies, which is a win-win, right? The business owner wins, but also everyone in your local community. If if it's a local grant or the state or everybody wins. It's a cycle. So that's huge. And then also no dilutive funding or financing, pretty straight to the point. The cons are very, very tough eligibility, meeting very specific criteria. And then also a lot of bureaucratic processes and paperwork are involved, and then also limited funding availability for startups. So in this stream alone, I've given you details into a total of 14 different ways to get funding with the alternative and then the additional 4 at the start. But that's only scratching the surface. If you're watching this right now, you have to know about 2 things, right? You have to know about 2 things. The first is Credit Suite's Funding 50 Challenge. It's been on screen the entire time. And if you were here from the start, I also mentioned it. Look, obviously I'm going to promote an event that Credit Suite is hosting, obviously. But when I tell you that it is truly something that you cannot miss out on, I say it with the utmost sincerity. You cannot miss out on what we have planned. 3-day virtual event, 100% free. The only thing you need to do is sign up. You get the Zoom link and join the Zoom link. And that's it. Very straight and to the point. That event is starting in 4 days. So that's Monday, the 22nd, and it runs to Wednesday, the 24th. We also have a bonus day that Thursday as well you can take advantage of. It's 4 days, jam-packed, full of knowledge, and you can't find it anywhere else. All presented to you live by industry leaders as well. So we have tons of people attend these, but it's still super interactive, and we even give you access to a private group with other members that you can freely network with, which is also awesome. This is the Funding 50 Challenge, highlighting 50 plus different ways you can get funding. Today we talked about 14 very quickly. This gives you 50 plus different ways, and even details on how you can do it in 30 days. That's absolutely huge. You cannot miss out on this opportunity. And I'm personally nerding out a little bit on all the stuff we have planned. So I'll absolutely see you there. Hopefully, you can scan the QR code on the screen or click the link in chat, or just go straight to funding50challenge.com. I mentioned I had two things for you. So are you still with me? If you want to get a head start on the challenge, you need to check out one of my all-time favorite Credit Suite guides. I've mentioned this in a ton of live streams in the past. It's a great one. I'm talking about the 27 ways to get funding. It's a free guide by us. This is a guide delivered immediately to your email inbox where you can start reading the details into 27 different ways to get your financing for your business. Again, we talked about 14 on this stream, talking about 50 plus on Monday. This is right in the middle and something you should absolutely check out. So if you click the link in chat right now, or just head over to creditsuite.com/27, creditsuite.com/27, you can be diving into that guide literally in like 90 seconds from now. So I'm looking forward to seeing you on Monday during the virtual Funding 50 challenge. Thank you so much again for spending just a few minutes of your Thursday with me. This was fun. Let's do it again real soon. Okay. How's, I don't have a watch on, but how's next Tuesday sound? We do 2 live streams a week. So make sure to follow or subscribe on whatever platform you're watching it on right now. Thank you again, Alfredo, as always, for handling everything in the background. And I hope everyone has an incredible weekend. Make it count, and I'll see you real soon.